equity, it has been a bad phase. We just discussed this. SIPs, large caps probably are in the negative for last 1 year. Mid caps are even back towards 2 years. That after that, probably the worst fears have come true. If you see the latest data, SIPs, the volume hasn't increased. Probably there are some closures also, if we know right. So how do you look at that?
Very interesting. Let's see what ICICI Prudential has done over the last 3-4 years. Right, last 4 years we have been continuously advocating. As soon as the market rallied in 2014-15, 2014 market rallied by October 2014. Last 4 years we have only been selling one particular strategy of ours, that is the dynamic asset allocation. Right. What does that strategy do? With that strategy, what is now known as balance advantage category. Right, SEBI has introduced that category. That category is something that we balance funds and balance advantage fund. We realized that the market has run up by October 2018. So what entire marketing spree of ICICI Prudential was going towards balance advantage category, whereby you take the money in of the investor. Investor is ready to invest, he is investing, you take the money in, but do not put the entire money into equities. A part of it goes for a debt and part of it goes for equity. So as the markets what does this category do? As the markets keep on going up, you keep on reducing your equity, and as the markets are down, you increase your equity. So this is the broad band of asset allocation products. So we have continuously been selling this asset allocation products rather than pure equity. If you remember 1 year, 2 years back, we have since last 2.5 years, we have been continuously saying that mid-caps are overpriced. Please get out of mid-caps. I have been on various channels. If you see any of my communication, I have been continuously saying that mid-caps are expensive. So much so, in January 2018, we returned some of the PMS that we had on the mid-cap. We returned the money with 40% IRR. Right, we gave the money back because we were seeing the market P is at ridiculous levels. Right. The market small cap P was 102 and right. And large cap was available cheap. So even if somebody wanted to go for pure equity, we always advocated large cap and not mid caps. So I think what we have done well is we have ensured that our investors did not have serious losses. Right, and the experience of investors, people who have invested with ICICI Prudential, has been reasonably good. So it is very important to take your investors pro-cyclical attitude, right? The fear is maximum when there is a problem, and there is a lot of greed when there is a good headlines are coming in the news. So you have to take people against that. So we have created contra-cyclical products. Right. How do you prevent? We prevent losses to the investors. If my mandate, we look at our mandate as to how do we prevent losses for investors, and in that I think counter-cyclical and this dynamic asset allocation, the balance advantage category is something that we have introduced something like an asset allocator, a fund of funds. It's called asset allocator fund, which continuously decides how much to invest in equity and how much to invest in debt. That's the latest that we have come up with. Right. It's a fund of funds. Depending on the market levels, I'll decide whether I should get into how much to equity and how much to debt. So the equity component in that today, if you invest in that, the equity component is quite low. It would be around 25%. Yes.
So, being contra-cyclical, in the run-up to elections, you were sitting on a lot of cash?
It is never cash in India. Remember, I use the word debt, not cash. Okay. So either I'm in equity or in debt. Okay. Debt in India gives a good return. The government of India gives you a return of 7.5%. The government of India, riskless return in India is 7.5%. A country which has got an inflation of 3 to 4% on the CPI is giving a return of 7.5%. So debt in my mind is a no-brainer in today's market. Right, and if you see with the current fear, as you are calling it, the yields have increased, the corporate yields have increased quite well. So a credit risk fund, what we call as a category, ICICI Prudential Credit Risk Fund, is a fantastic fund to invest in. The yield on the portfolio today is around 10.5%. So if you are getting double digit, the nominal growth of this country is around 11%. You take 7% of growth and 4% of inflation, you come at 11%. And there is a credit fund which gives you the yield on that fund is 10.5.
You have indexation on that?
And if you stay there 3 years, you get indexation. So the tax-free return is quite good on that, right. Because there is indexation. So post-tax, it gives a very good experience to the customer. So a double-digit return on a debt fund Why would so risk adjusted wise we feel that credit risk category is a brilliant category to be in.
Right.
And when the fear is maximum, that is the time you get into, when there is euphoria and everybody wants to get into small cap, mid cap, you don't go into small cap, mid cap. So wherever there is fear, it is the best place to go in.
So in that scheme of things, elections are nothing.
See, in the medium term, right, markets will follow earnings. Right. Elections, of course, is a major event. Right now, the elections are a major event, and we are very cautious.
So what is the position there?
On the debt, we are very cautious, as always we have been, and we will take a cautious stand. And our mandate is to invest, so we would remain invested, but we will be more cautious than what we are normally.
And on the equity side?
On the equity side, we have been majorly now saying that mid caps pricing has come off. The valuations looks okay. If you remove some of the loss-making, even the index PE right now looks high. But if you remove the loss-making companies out of that, the index PE is okay. So we feel that people should start biting in mid caps. Which this is the first time that ICICI Prudential has been saying only since last 2 months that we should start biting into mid caps. So SIPs. So we believe this is a SIP year. We don't know which way what is going to happen in the month of May. We don't know with Morgan Stanley decreasing weightage on India where that is going to come about. So since there are a lot of uncertainties, either you go into a credit fund or you go into asset allocation funds, or if you are doing pure equity, do it in the SIP fund. So those are the three simple things that we see.
In that space, because interest rates are on a down cycle.
Right. So I feel the credit space is a brilliant space to be in.
Okay.
So credit risk fund is something that I recommend very heavily to my investors. And the best thing is to do an asset allocation fund. What we have come up with asset allocation fund. Let us decide how much to, and we have got time tested models. ICICI Prudential has been advocating this asset allocation. We have got an inbuilt model through which we decide how much to put in equity and debt. So no emotions are involved. When the market becomes expensive, it is not that somebody might feel that the markets can still go up. The model decides that how much to put in equity and debt. So for the asset allocation, we have removed human emotions out of it.
Right.